Yes, guys. We are back. Happy Monday, 23rd of February, 2026. It's 12:19 here in the UK, and we are looking at the New York session. Super excited to get right into this and to see what happens from here. Um, you know, let's see where this thing takes us. We're doing the same things over and over and over again here. We're doing a daily bias breakdown, and we are basically working from that perspective. Okay, so this is education. This is education we're looking at and we're working with here, and we're just essentially trying to build a framework that allows us to get into the right setup for the New York session day after day. So today, again, we're going to do a higher time frame breakdown. Reason is because the higher time frame gives us our bird's eye view. So gives us our bird's eye view. Okay, that's what we're looking for. We need a good bird's eye view to make the right decisions when it comes to taking a position. All right, so we're going to start with a monthly. In fact, I'll go back up with a time frame. Then we'll go straight to the 12 monthly because you can see that we've taken out the previous 12-month high. So to be fair, the market is with the bears straight away. I can tell you that based on this, based on the fact that we can see, look, the market opened up over here, dropped this low over here, traded all the way up into this high, and we have not been able to continue. We've rather turned around and pushed down. So you can see that New York session, the sellers are the ones in the dominant on the dominant side. Okay, so sellers are in control here. Right, and if you follow that into the monthly, the same is true. As the market took out this previous month high, sellers came in. So basically, January could not close above this structure level because the selling pressure came into the market. When we opened up for Feb, we tried to go higher a little bit, but we failed. Buyers didn't have enough momentum, and the sellers have continued through February this bearish pressure. Okay, so overall, my thought process on the monthly is that we're bearish. Okay, that's just my overall take on this. And also, one of the things that's helping me develop that, guys, is the fact that you can see the 12 monthly, the previous high has been taken. Plus, you can also see the monthly candle formation. What do I mean by that? What I mean is that you can see here that when we've opened up here and gone higher, we are trading beneath the open. You see the open over here? We're trading beneath that. That tells me, look, I'll put an arrow here real quickly, a line here. So that's the open price. Price has pulled up. Sorry, let me get that back there. Price has pulled, nope, still not giving me a chance. Let's move this out a bit. There we go. Price has pulled up. So it's open. We opened with a slight gap because we closed over here. We then opened over here and we've attempted to go higher. And then guess what? We've been trading beneath the open since since the first February, whenever we opened for Feb, which was the first trading day for February was on the 2nd. So since the 2nd of February, we went higher and then we traded beneath it. We closed beneath that open, guys. That is a directional indication that price is trading bearish, right? Because we have the open price for a reason. We are trading beneath the open. That is a massive, massive indication as to where price is going, in my opinion, and in my analytical opinion as well. So I'm liking this as a bearish signal for for GBPUSD. Okay, if we go to the weekly, guys, you can use the same. We can use the same principle of analysis, right? Number one, first thing we're going to do on the weekly. Number one, we can see that price has been creating these lower highs, and we're not closing above the highs. And you can see another high has been created. This point here represents a high, so we can see that another high has been created right here. Look at that, beautiful. See that? brilliant. So what we're seeing here is that market structure is supporting. So you got the high, you got a lower high because this high over here has not gone above this high. Then you got a lower high again because that hasn't gone above that high, and got a lower high again because that's gone above that high. And then we've got another lower high. We've got another lower high has been formed, right, indicating that price is still moving to the downside. All right. We create lower highs in a bearish market. So what we're saying is that the market is potentially still moving bearish because structurally, you can see some good reasons as to why price is still potentially moving bearish. Now, so what I'm going to put here is, I like this a lot. Let's see what we can do here. On the weekly, you can say bearish. Now, someone goes, is this guaranteed? This is not guaranteed. This is not financial advice. This is not guaranteed. This is my personal approach to the market. This is what I've tried and tested for myself. And I'm just bringing you along my journey. So please don't take this as gospel. This could be wrong. My assessment could not necessarily be right. But I've tried and tested it for myself. And this is what I do every single day. And it works for me. It's the simplest approach for me to being able to understand how to move in the market. And at the end, actually, what I will do is I will break down an overview of how I approach this every day without changing my approach. I don't change my approach. I don't change my session. I don't change my pair. I do the same thing every day for the same amount of time. And so, yeah, this is basically it. So what we're going to do here is we're going to say market structure. That's the first thing I'm going to look at. But then there's so many other things. If you look at this, you can see that we've come off the back of two engulfing candles. This candle engulfed this week. This candle last week tremendously engulfed this previous week. So we're going to put coming off. I'm just going to put engulfing candle pattern from the previous week. And I'm going to put previous week. But then also candle formation again. Because guys, if we use the same principle of how the candles opened and where the candle's trading, again, very straightforward. What do we have over here? We have price doing the same thing. We have price doing the same thing here, guys. And what's that? We have price essentially telling us that we opened over here, right here, traded higher. And what are we currently doing? We are trading beneath. I take this over here. We're trading beneath the open. Oh, wow. That is brilliant. This tells me that price potentially could, and just on top of that, guys, we've locked in a high. There's your high, there's your open, there's the price currently. That is a great indication as to where we believe price could be going. Okay, this is important, right? Because when you're looking at candle formation essentially can tell you what price is doing directionally just by understanding where the open, the high, the low, and the close is. But we know this hasn't closed, right? We know it hasn't closed. So what we do know is that it's put in at least 2 out of the 4 parts of the candle that we need in order to help us understand what's happening. It's put in number 1, the open. There it is. There's price closed over here, then opened over here. So we had a little bit of a gap, right? And then it put in the high. That's number 2, right? So there's 2 things that are going to happen from this point. Price will either continue going higher, or price will trade back the other way. And look what price, or because sometimes price could also maintain a sideways approach in the market. What are we having? Price put in this high over here. There's the high. And then what did it do? It's trading beneath the open. There's the open. We are trading beneath the open. So that tells me we are on the downward trajectory. Now, does that mean price is going to continue lower? Well, that's why we're assessing. But from my weekly perspective, if I was to take a snapshot of price right now, what would be my weekly perspective? I would have to say bearish. The weekly would be bearish for these reasons, plus this candle formation over here, okay? Now, another thing that I want us to quickly highlight here is, I get rid of, another thing I wanted to highlight is the fact that we are trading within, this is our weekly range. We're trading within this weekly range. Okay, there's our range. All right, so if price is bearish, we're saying the draw on liquidity is to the downside over there. Boom. There's the weekly draw. If price is bullish, then is there potentially, we don't know, no guarantee, but the draw is going to be towards the upside. Okay, very straightforward there. Keeping things very simple and following a higher time frame directional bias. So we go again. So on the daily now, let's keep going. This is a nice market. I think even the last few weeks have been really, really nice. We had a few little turnarounds here, but generally speaking, it's been okay. Okay. Now if we go to the daily time frame, or in fact we'll try the 2-day. Yeah, nothing to do there. Okay. I need to grade my plan then. Didn't realize that. Okay, daily. All right, if we go to the daily, then we have to upgrade my plan there. Okay. If we go to the daily time frame, what do we want to do? The daily will tell us exactly what we want here. We can see, once again, guys, we use the same principle of analysis. And that principle of analysis is straightforward. And essentially what we're going to do here is we're going to say, we go to the daily time frame here, you can see that price, once again, we're going to use the candle formation to give us an indication. I'm gonna put it in here straight away first. I'm gonna put bearish here first, and then I'm gonna put candle formation. Again, we're gonna use the same principle, guys. This is our approach to the market. We don't change it. It remains the same. Here's the principle. The market has opened over here. Look at where it's opened. There's the opening. I'll use my cursor here. Market's opened here. Do you remember we had a kind of a bullish, kind of an indecisive day on Friday, right? But then we opened over here. There's the open. Nice. Price puts in the high. So we've put in the high, right? Remember, we've been putting in highs all this time. We never got above this high. We've put in a high, right? So then price now has a responsibility. Its responsibility is to go higher or turn around and go lower, or it could be going sideways. What does price do after putting in this high? It says, that's enough now. We're going back the other way. And when it goes back the other way, we can see. Now, remember, this is us taking a snapshot of price action as a result of what, 1232. This is what we're saying the daily time frame is looking like at 1232. We can see that price is trading beneath the open. This is phenomenal, guys. Look at that. We are trading beneath the open price. So we can say that at this particular moment, the daily time frame is giving us a bearish reading on the candle formation alone, right? We can see that price at one point was up here. Price is now down here. But what's significant about where price is that it's trading beneath the open price for the day, which gives us maybe a potential feeling that price could, there's no guarantees, price could continue that way, right? So that's, again, there's no guarantees. We're saying this is what we're developing a bias. It's what we think might happen. But we're developing a logical approach to the market. Price was at one point here. And my thinking is if price wanted to, it would have continued higher. But price didn't want to. It hit some form of resistance and has traded back into this to this point over here. But what's so significant about it from a candle formation perspective is that it's trading beneath the open. So candle formation is a great reason why I think the daily time frame is bearish. And then on top of that, what do we have here? We have price taken out previous day high. So again, all we're doing here, guys, is just developing a higher time frame bias. So we can, let's say here, previous day high taken. All right. So that's important as well, because that means what we try to achieve in terms of moving to the upside has happened. So PDH taken. Lovely. Remember, we're just developing a higher time frame perspective here. So from what we're looking at, guys, from what we're looking at, I won't go beyond the high time frame. From what we are looking at, we are saying that potentially, right, price may be moving to the downside. If price maintains its current higher time frame perspective, then I anticipate, this is an anticipation. Again, notice what I said there. If price maintains this current structural momentum, then I anticipate that price will continue for today towards the low, potentially. I haven't gone further down, but I'm just giving you a higher time frame bird's eye perspective. Now, if I am to change my mind and try to buy this, it would require price to break through current highs in order for me to believe it. So there's a long way for me to even want to buy it. So I'm very much on the bears. I'm very much supporting the bears in the GBPUSD New York session. I will be, based on my higher time frame, I'll be analyzing for a bearish market, a bearish move. Bear in mind, I haven't yet gone through the 4 hour, the 3 hour, the 2 hour, the 1 hour, which will help me develop that framework even more. But what I'm trying to get you to see is, I'm trying to set up a higher time frame perspective, and then we can begin to narrow down into the 4 hour and the 3, 2, and 1 hour. Okay, so what can I leave you with? I think key things here is we've been able to establish the monthly looks bearish, the weekly looks bearish, the daily looks bearish, higher time frame bearish. Listen, the higher time frame is stronger than the lower time frame. The higher time frame is stronger than the middle time frame. So if my overall perspective is bearish, then I'm already kind of 1 foot in the door, leaning towards the bears. Okay. I'm not going to go against my higher time frame unless we have tremendous breaks. In fact, let me give you one thing I would say, because you could have a higher time frame that is bearish overall, but you could be in a pullback day. So in other words, you could do all your assessment and it looks like the market is bearish. Yes, it is. But on that particular day in a bearish market, you could be moving from lower low, sorry, to lower high as a general daily move. So that's the time where you might go, okay, fair enough. The market's bearish from a higher time frame perspective, but for today, I am going to buy because the move is maybe a pullback or a retracement day. I think that's the only time you would kind of see yourself going against your higher time frame. But other than that, even that move is not necessarily going against your higher time frame, because you're trading it within the context of a bearish market. There's a difference between trading within the context of a bearish market and whereby you're buying, versus trying to buy the market when the market is bearish. I think there's a massive difference. So today, I'm saying that we are actually still bearish, and I'm also still looking for a bearish move. We are not trying to buy this market today. At this moment in time, I'm not trying to do that. I'm looking for potential opportunities to sell this. Okay, so there is my analysis, guys. I hope this has helped in terms of a higher time frame perspective. Every time we come on here, we're going to be looking at higher time frame analysis and setting yourself up to then dig into the middle and lower time frame to develop further assessment so you can make a decision. Now, the further breakdown, guys, is in my school link. If you're interested in building further structure around your trading, I've built a private community where I break this down a bit more in depth, including live sessions and full course framework. We go into how to take the trade, how to enter the trade, how to look for the final details before you make a decision. That's all in my school link, which is in the description. So yeah, if you're interested in that, please do sign on to that, and then let's go on that journey of going further into what needs to be done. All right, guys, I hope this stream blessed you. Please do like and subscribe, and I'll see you in the next stream. Blessings.